Today we're talking about the E in LendNow, and that's evaluation. So when I talk about evaluation, I'm really talking about evaluating the borrower. Now, if you've decided to lend to individuals, that means you're evaluating their financial status and their financial history. So if you think about, like, when you go and you apply for a car or a credit card or any other line of credit or any other transaction where there's financing involved, the entity that you're applying to, they do some research on you, right? They evaluate you, they have you fill out an application, they ask you some questions, and they sometimes want proof that you're solvent, that they want to look at your finances. You are going to be doing a similar process for the borrowers that you are vetting. So if you're lending to individuals, there may be things you want to see. You may want to see a certain credit score. You may want to see that they don't have certain crimes on their record. Maybe you don't want to see any financial crimes on their record specifically, or maybe you want to make sure that they have a certain amount of available credit. I don't know. It's up to you to decide what is most important to you to make you feel secure that this person can actually pay you back. You might even ask for pay stubs, like different lenders ask for different things. And then when it comes to vetting an entity, depending on what the transaction is, you may want to look at different things. So let's say you're lending to like a fix and flipper. You may want to know, okay, how many flips have you done successfully? You may ask for a spreadsheet to see, let me see all your successful transactions. And sometimes if it's like a real estate agent, they can send you a public listing of all their transactions. You may want to see the numbers of this specific transaction. That's more on the due diligence side, but you may want to see that they have some skin in the game, You may say, hey, I know you're asking for this amount, but I want to make sure that you have put some of your own money into this, because if your own money is wrapped up, you're more likely to pay me back, If you're lending to, for instance, a general contractor, you may want to see their financials. You may want to make sure that they're not robbing Peter to pay Paul, like borrowing money from you to pay back some other lender that they are late on their payments to. So you may ask for that. You may ask for specifics about the project. You may ask them to pledge some of their personal assets to secure the loan. It really just depends on what you'd like to do. It's really your business, so it's up to you to decide. For me, when I am vetting an entity, I tend to ask for a personal pledge of collateral. If I'm not putting a lien on the property itself, because remember, I only lend to general contractors and I lend to fix and flippers. And so I can't put a lien on a house that a general contractor is working on, but I can ask for them to pledge certain assets. Whereas with a fix and flipper, if they're the one that bought the house, I can absolutely place a lien on the property. And so it really just depends on the type of transaction you're doing, but make sure you have a process for evaluation. Some people even have an application. It's a simple online form they create. It could be a Google form or whatever you choose, but you have to come up with a way and a process for evaluating the borrower. So I would say this should take you no more than maybe 2 hours, especially if you have like the application part. So once you've already set up your entity and everything, or while you're waiting for it to be approved, go ahead and decide what your process is going to be for evaluating your potential borrowers.